Well, the market keeps on going up, and that has many wondering, when will the market crash? Well, I'll show you how to answer that question for yourself, and we'll even look at Bitcoin to see if it is going to crash. I'll do my regular weekly market analysis. We're going to look at the day trade of the week on SYPR, and we'll run a market scan in search of longer term trading opportunities, all coming up. So when will the market crash? Well, markets that go up eventually have a correction. It is part of the normal cycle in markets, and it tends to be unexpected, but not without warning. The typical pattern that we see when a market corrects is first a break of the upward trend line. Now, this is even more important when there is a break after the formation of a falling top. And another positive signal that a crash is coming is abnormal volume when that upward trend line is broken. Now let's take a look at the chart of the S&P 500, and you can see a number of instances when this has happened. We had an upward trend here, we broke the upward trend with strong volume, and we had a sharp move down. Remember, this is a weekly chart, so these moves last a couple of months. Here we had the upward move, the break with very abnormal volume, and we had a sharp pullback. Now we had a break of the upward trend here, but neither the price action or the volume were exceptionally strong. And the same can be said for there. So it really helps in terms of trustworthiness to see that abnormal price action with abnormal volume. You want that signal that everyone is rushing for the exit door at the same time. All right, let's get into the normal market analysis, and we'll see something interesting in one of the charts. So first up is a chart of the S&P 500 here, and you can see that we have, this is the 30-day, 60-minute chart, of course, and we're generally still in our upward trend. This is an upward sloping channel. We got up to the top of the channel. We've sort of started to fall back. Normal course of trading. Things look relatively healthy for the large cap US stocks. Looking at the longer term chart, you can see why I'm a little bit concerned. This market has been going up for a long time, and at a certain point there will be a move lower. No sign of it yet, but I've told you what to watch for, so let's just keep an eye out for it. Looking at the Nasdaq 100, it is not participating in the same way that the S&P 500 is. The Nasdaq is, however, trying to break this little pullback that it's been in for the last 5 or 6 days. So I do think the large cap tech stocks are more likely to go higher than lower near term. The IWM started to show a little bit of life this week. You can see a little bit of an uptick there, building a rising bottom. Maybe we'll get through this resistance. It's still very early. The small caps have been a pretty dead place for the last 2.5, 3 months, but there is some sign that things are starting to get encouraging. We'll have to wait and see what happens next week. On to the Canadian markets, and the short-term chart had a little bit of a breakdown this last week and a little bit of profit taking perhaps. Nothing major to be concerned about here. When we look at that long-term weekly chart, you can see that the upward trend line is still in place, but if that upward trend line were to be broken, if there was a strong selling week through that upward trend line, then I would get defensive. TSX Venture has been dead for the last 2.5 months as the retail investor seems to be licking their wounds following some of these hot markets that eventually burst. So no sign of real enthusiasm among the microcap investors in Canada. On to currencies. Here's the US dollar. It's been drifting the last 3 weeks, but it still is working on that break of a downward trend line, and I think it's still valid until we move to new lows. I have some optimism about the future direction of the US dollar. Now, here is the interesting chart. This is the chart of Bitcoin. There's the upward trend line. Ran away from the upward trend line, came back, bounced off of it. That's good. But this week, we are breaking the upward trend line with pretty good volume and pretty strong price action. That makes me think that at a minimum, Bitcoin goes sideways, and it could very well go lower near term, I would be quite defensive with Bitcoin right now. Commodities, well, there's the chart of oil. You can see it's been in a good little upward trend. It took a breather for a month, and this past week, or last week really, it broke that pullback and it's slowly starting to build optimism again. So I have some optimism for oil getting back to the highs from late 2019. And the fear chart, here is the fear chart. You can see that fear is at a low, so no real fear in the market now. So my ratings, bullish on both time frames for US and Canadian stocks. Gold, I remain neutral long term, but bullish short term. It's slowly building some optimism. Oil, bullish long term and neutral short term. The large cap index continues to move higher with no sign of breakdown. We do want to watch for that break of trend as a sign to get defensive, as has happened for Bitcoin this week, but certainly not for stocks yet. Gold is holding at its long-term upward trend line, and oil may resume its upward trend with that little break of a pullback. And as I said, fear is low. All right, now it's time to go to the day trade of the week, try to give you a little lesson on some of the ways that I day trade the stock market. We always begin with that search for what we call action candles, which are abnormal price, abnormal volume, and we look for that on the 2-minute interval. Well, sometimes I don't really like them on the initial break, but if they give what I call a second signal, well, then they're worth considering. And that was the case for this week's day trade of the week, SYPR, which was heavily traded on Friday. And you can see that it started the day with an action candle right there at 9:32. The problem was it was breaking into a little bit of pessimism, so you have to be concerned that there may be some selling pressure. And the stock went sideways for a good part of the morning, building what's called an ascending triangle pattern. It then gave that second signal when it broke out through the high of the action candle right there before 11 o'clock, and that's when it went on a really nice strong move, moving from under $4 to over $5.50 in a relatively short time. Now, the economics of this trade, for every $100 of risk that you want to take, would require 580 shares. That's $2,134 of capital. It's possible to margin a stock like this because it is over $3. So you'd only have to put up $715 to take this trade. Now, at the end of the day, it was at 4.2 times risk, so $420 gain. That's a nice 58% return on your capital. During the day, however, it actually hit 12, 13 RR, and I think a reasonable selling point when this trend goes parabolic and then gets broken right there at about 9 times risk. That means a $900 profit, better than a 100% gain on the capital it took to take that trade. All right, now we'll do a little market scan on Stockscores, see if we can find something. This week I'm going to run the abnormal break scan. So we'll jump into the Stockscores website, select the abnormal breaks US scan. You can do this for the US or Canada. The only difference between the two scans is really the liquidity that we look for. We have a lower liquidity standard for the Canadian market than for the US. And we're looking for stocks that are breaking from predictive patterns with abnormal volume. Now, I could have limited my search to stocks, under $15 or between 5 and 10. You can add in whatever filters you like when you're doing these scans. What I'm looking for is a break from a predictive pattern. And you'll notice I'm going through these quite quickly. What I teach people with the different courses I do is how to read charts. And once you get good at it, you literally can look at a chart for a second and know whether it has good potential or not. And that's what I'm doing here, just ripping through them pretty good. This one looks interesting. This is CalAmp Corp. You can see it's been going sideways for 3 months. Traded big volume, abnormal volume on Friday with an abnormal price move. All right, so in that time frame, the daily, it looks pretty good. But we still want to take a look at the 3-year weekly chart to see what that longer term pattern is. And here I can see what's called a cup and handle pattern. So there's resistance right there that's held up going back into 2019. This stock has not traded above $12.50 since 2019. It's got rising bottoms, which means there's optimism, and it has nice low volatility here which is one of the things that I also require of the stocks that I will trade. So as a position trade, as a longer term trade, this has a lot of good things going for it. Some issues in that there is still people at higher prices that will provide some resistance, but that's 2.5 years ago. Probably they're shaken out already. I think this is a pretty good setup. I would give this a 6.5 out of 10. Now, if you want to learn how to do this and how to use the market scan and also how to access the market scan, because you can only access the market scan if you are a member, just go to the Learn How to Trade page, and there's videos here on my different courses and memberships and that sort of thing. If you want to know what the different memberships are, go to Products and Services, and you can see a breakdown in this grid of the different things that we offer at Stockscores. We'll leave a comment if you've enjoyed this video. Click on that like button, subscribe to the channel, and most importantly, trade well.